Hello, everybody, and welcome to this discussion. In this section, we are going to discuss about economic agents and circular flow of economic activities. These two topics are very related, and it is better to discuss together. Let us start with economic agents. Economic agents are participants or the major participants in the market which can make the decision. For example, they can make the decision of demand, supply, or production, and so on. Economic agents shape the world we live. The allocation of resource is dependent on the economic agents' choices. Their choice affects the allocation of resources. Economic agents are the economic decision makers who can recognize different factors that influence and motivate different economic group. Majorly, economic agents can be divided into four categories: consumers, producers, central bank, and government. These economic agents can influence the capital markets and the economy at large. The aggregate economic level can be also influenced by these economic agents. These are the four major types of economic agents. Some scholars put governments and central banks together because the central bank is owned by the government, so they put together as one economic agent. Let's move to the next section. This is some detail about the four economic agents, the role of those economic agents. Consumers are the end users of the market. The end users, they use the products, that is goods or services. They cannot transfer to the other customers or consumers. Here, there is a difference between consumers and customers. For example, the customers may resell the service and goods by adding a value to the other customers. But the end users are the used up that goods or services produced by the firms. They are the end users. Firms are economic agents whose role is to transform factor of production such as labor, land, capital, and entrepreneurs to products, that is goods and services. They may be public firms or private firms. And the other is government. It is also an economic agent which provides rules for how those economic agents can interact one with the others. They prepare policy and procedure how those economic agents interact one with the other. They prepare a governing rule that those economic agents obey, that those economic agents can interact one with the other. And the other is banking sector. It is an economic agent also, and it facilitates the business transaction. For example, when we want to buy something, we can make a payment through bank, or we can make payments to different utilities through bank. So their main role is to facilitate the business transaction. And the next is the objective of the economic agents. All four economic agents have their own objectives. The first one is consumers. Consumers' main objective is to get the maximum utilities or satisfactions from goods and services. As we discussed before, there is limited resources, and on the other hand, there is unlimited wants. So the consumers want to maximize their utilities with their limited resources. with their limited resources. They want to maximize the satisfaction or the utilities that they can get from services and goods. Second is business or firms. Their main objective is to maximize profit or sales. Their role is to transform input, those factors of production, to the output. Along the way, their main objective is to maximize the profit or sales, because maximizing the profit provides several benefits for the business. And third is government. Government main objective is to keep the welfare of the society, the citizens in the country, and to bring economic development for the country as a whole. These are the main objectives of the government. And the last one is the central bank. The main objective of the central bank is to smooth the business flow in the country, to smooth the business flow of keeping a smooth flow of the business in a country. In this section, we are trying to discuss about circular flow of economic activities. Circular flow of economic activities. Let us put two agents here, the households or the individuals like you and me, and here there is business which transform inputs to the output, that factor of production into products, either service or goods. And following this black row, by the way, both firms and individuals have their own demand and supply. The households provide resources to the business through resource market. The household can give a resource to the firms, and the firms fulfill the demands. The demand of the firm can be fulfilled from the resource market. The resource market can fulfill the demands of the business. And after conversion process, the firm supplies a product market. The firm supplies the goods and services to the product market. And individuals or households can get a product, can get service and goods from a product market. So these black rows show the flow of the resource and the product. And this green arrow shows that here, in order to get the service and goods, the individuals pays money. That is expense for the individuals. It is an expense to get goods and services from the product market. And this payment is used as a revenue for the firm. It is a revenue for the firm by selling that goods and services to the individuals. And after that, after getting that revenue, they pay that money to the resource market in order to get those factors of production, for example, land, labor, and so on. So they pay to the resource market. That means they pay for the households or the individuals who own that specific resources. So this green arrow shows the flow of the money. The flow of the money for the households. Actually, here the money is a cost for the firm, in order to fulfill the demand of the resources, and here it will be a revenue or the income of the households. The income of the households that can get through selling resources to the firms. And the same is true for the government. The government also participates in this circular flow of economic activity. In this section, we particularly see about the circular flow of income in a four-sector economy. let us see one by one. The households or the individuals sells the labor, sells resources to the firms, and they can get income as a form of salary or wages. That income is used again to get services or goods from the firms, so it forms a loop. And some part of that income of the household is saved to the bank or deposited to the bank, and the bank in return pays credit or gives a credit for the firms, gives loans for the firms, and the firm again pays a salary or a wage for the households. And some amount of the income is paid for the government as a form of tax, and the government in return subsidize the firms or provide different utilities for the firms like electric utility, road or internet or water utilities like that. And on the other side, some of the income of the households is used to import products which is not available in the local market from the external sectors. So they pay a money to get that product, and that external sector in return pays a money for the local firms in order to get the product from the firms. So it also forms a loop. So this is all about circular flow of an income in a fourth sector economy, and this is the end for today's discussion. If you have any comment or questions, you are welcome. Thank you for listening, and we will meet with the next section, that is profit analysis. Till then,